Welcome back to my YouTube channel. Today we discuss limited liabilities companies LLCs. A limited liability companies is a hybrid form of business organization that combines the best aspect of both a corporation and a partnership. It provides its own card members with corporate style limited personal liability and the federal tax treatment of a partnership, especially well situated for small and medium-sized firms. It has forever restrictions and greater flexibility than an older hybrid business form. The S corporation, which we discussed in the section on tax, until 1990s, only two states, Wyoming and the Florida, allowed the formation of the LLCs. A 1988 Internal Revenue Service IRS ruling that any Wyoming LLC would be treated as a partnership for federal tax purposes opened the floodgates for the remaining states to start engaging LLC students. Though new to the United States, LLC have been a long accepted form of the business organization in Europe and Latin America. Limited liability companies generally possess no more than two of the following four desirable standards corporate characteristics. One is limited liabilities, and second, centralized management. Third is unlimited life, and four is the ability to transfer ownership interest without prior consent of the other owners. LLCs by definition have limited liability. Their members are not personally liable for any debts that may be incurred by the LLC. Most LLCs usually maintain some type of centralized management structure. One drawback to an LLC, however, is that it generally lacks the corporate features of unlimited life. Although most states do allow an LLC to continue if a member's ownership interest is transferred or terminated. Another drawback is that complete transfer of an ownership interest is usually subject to the approval of at least a majority of the other LLC members. Although the LLC structure is applicable to most businesses, service providing professionals in many states who wants to form an LLC must resort to a parallel structure. In those states, accountants, lawyers, doctors, and other professionals are allowed to form a profit LLC, PLLC, or limited liability partnerships. A PLLC look alike. One indication of the popularity of a PLLC and LLP structure among professionals can be found in the fact that all of the big four accounting firms in the United States are LLPs. The tax environment. Most business decisions are affected either directly or indirectly by taxes. Through their taxes power, federal, state, and local government have a profound influence on the behavior of the business and their owners. What might prove to be an outstanding business decisions in the absence of taxes may prove to be very inferior with taxes and sometimes vice versa. In this section, we introduce you to some of the fundamentals of taxations. A basic understanding of this material will be needed for later chapters when we consider specific financial decisions. We begin with the corporate income taxes, then we briefly consider personal income taxes. We must be mindful that taxes law frequently changes. Closer look at tax in the next section. Minor disadvantages include the length of time to incorporate and the red tape involved, as well as the incorporation fee that must be paid to the state in which the firm is incorporated. Thus, a corporation is more difficult to establish than either a proprietorship or a partnership.